had a great question on how do you take profit on news trading events. Now, this is a very skillful process, but there are some simple ways that you can outline this to really know, where you should be taking profit. And it can be a hard question to answer, particularly our human psychology. Once profits are running, you sort of want them to keep running and running and running, and so the temptation is not to take profits at obvious points. But I'm going to show you with an example where you could take profit and how to know whether you should let the trade potentially run or not. So here we go. Now, this is the euro pound pair. We had some PMI prints out on Wednesday. Now, let me just show you this. Here we go. Now, just take a look here on this Wednesday print. It was 23rd of August. We saw very weak Eurozone PMI prints. And then we saw very weak UK PMI prints. Now, in the current market context, we were looking for opportunities to sell the pound. And the very weak euro data sent the euro pound pair lower, but then the equally weak, if not weaker, UK data sent the euro pound pair going the other way. Now, because the pound longs were so very stretched, any indication that those longs were on the wrong side of the pound, or the Bank of England might be reaching terminal rate, we were very tuned in and have been, for weeks, that the market was looking for an opportunity to sell the pound. And then finally, we got a clear opportunity in this on that previous week. It was a no-brainer opportunity. Now, the obvious trade was euro pound upside. Now, this was the very weak PMI data that came out. So let's say, as that weak data came out, you looked at, thought, yes, I've got a euro pound upside bias. And let's say you got to fill in, 0.8528, something like that. By the time you got an opportunity to enter the market, your entry was about up here, 8.528. And then you're thinking to yourself, well, okay, I'm expecting euro pound upside, but where do I take profit? So the first thing to do is you take profit at obvious resistance levels overhead. So there were two obvious ones. The R1 pivot point, that was the first place to potentially take profit. And then the second obvious place, R2 pivot point. And at the time I said, that's the ultimate target, is if we see price move up to that R2 pivot point. That for intraday traders, that's the ultimate target. It's also in line with that overhead resistance from the 17th, 18th, and 21st of August. You've got top, swing point, obvious take profit area. So there were two options: taking profit the R1 or the R2. And the R2 was the obvious intraday. And you can see once price moved into that intraday, then price moved lower. Now, we also said at the time there is a potential for the euro pound to keep moving higher. And if it did, there was a potential for it to move up to a next obvious overhead resistance area, which is just, get rid of those pivot points now, which was just at that support area from the 9th of August. We can see that as price broke higher on the Wednesday, you can see it wasn't unreasonable to expect further moves, maybe up to that target. Now, in the event, I ended up taking profit as price moved down. There was a slight little bit of a negative headline for euro pound. We also had on the Friday risk of ECB Christine Lagarde speaking. So it was just like, okay, I don't want to be holding on to this around this risk. I'm going to be, just stubbornly holding on. But you could have said, it would have been better to have held on and taken profit ultimately just underneath that big round number, 8.600 into that support level. So that was an example where you could intraday, generally speaking, the best place to take profit is on the day of the intraday news event, especially if you're using leverage. Just look for the pivot point. And if, say, you got up to this R2 pivot point and then you start to see a rejection, you might think, I'll just take the profit. Whereas if you enter the sort of 8.52, so you got an even worse fill, 8.533, you're going to see all your profits evaporate overnight. And then with the risk, potentially there's a new day, another headline comes out and everything reverses. So the general rule of thumb is take profit intraday at overhead, if you're going long, obvious overhead resistance areas. Don't get greedy and sort of think, okay, I'm holding on and I'm going to wait for you know, 0.8700. That's going to be my, that's going to be my target. The danger is you have unrealistic targets, and you'll end up having a very high uh, win-loss ratio, in that you'll have a lot more losers than you have winners, and then you'll have to have the absolute, strength to hold on through significant drawdown. Generally speaking, take profit when you get those opportunities, when you've seen those clear market shifts as an obvious catalyst, because you're just sort of confident that, hang on, if you know there's no data coming out for the rest of the day that's likely to move the euro or the pound, but the data out in the morning means a strong euro pound upside bias, why is the euro pound going to suddenly sell off in the afternoon for no apparent reason? And if it did, it's likely to find dip buyers. But then when you get time risk, so the greater time passes after the event, the more chance that other drivers come in. There's a change of shift on the desk. People, they just sort of forget about what happened yesterday, or even bigger driver comes in. You want to keep it as close to the event as you can, and basically close out intraday is my rule of thumb. That's pretty good to go with.